You're going to see a little bit of resistance in the $33 area and up at 48. But what is driving this breakout, these prices surging in silver? $50 silver, $100 silver, it isn't going to raise the cost of each solar panel by that much. But when you get up to $700 silver, they're going to be really trying to conserve on this, or it may even slow down the sale of solar panels. This is from Just Dario, and he says 409 to 1 is the paper to real silver. So you've got
Mike Maloney, founder of goldsilver.com, sees silver's recent breakout to $39.33, its highest level in 14 years, as more than just a technical move. He calls it a significant market shift. A combination of technical and fundamental factors has driven the rally. A key resistance level from 2011, where many longtime investors had either sold or are now holding for much higher prices, appears to be weakening. With that heavy selling pressure largely behind, Maloney notes that resistance is now limited to just a few key levels, $33 and $48, leaving a wide open path for silver to continue climbing. Silver's rise to $38 earlier this year marked the end of a decade-long stretch of stagnation. It also underlined just how far the metal has lagged behind gold. Maloney also emphasizes the increasing importance of silver in solar energy. In 2023, silver used in solar panels accounted for 16% of the global supply. That number is projected to hit 25% by 2030. And it's not just because more panels are being built. Each panel is using more silver. According to the Silver Institute, industrial demand reached a record 654.4 million ounces in 2023, with a significant portion of that coming from clean energy applications. Maloney argues that silver prices rising to $50 or even $100 wouldn't seriously affect solar manufacturing costs. But if prices were to spike to $700, that would change the equation. At that point, producers might be forced to find workarounds, either cutting silver content or slowing production. Solar PV-specific demand alone accounted for 17% of total silver demand in 2024, compared to 5.6% in 2015. The most significant push is coming from China, which increased its solar capacity by 45% in 2024. However, despite record global solar installations, PV-specific demand remained relatively flat in 2024 due to manufacturers' aggressive thrifting as technological advances helped them reduce the amount of silver needed per panel. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
Silver set another 14-year high and closed at $39.33. So what is driving all of this? I've pointed out many times, we've got some very weak resistance back here from 2011. And this resistance, most of the people that bought back then, they either sold or they're hanging on for higher prices. So there's not going to be a lot of selling coming into the market from these purchases way back in 2011. This is going to be weaker technical resistance. The people that read tea leaves and goat bones, when chartists all are looking at the same thing, it becomes a self-fulfilling prophecy. Too many people are going to be placing sell orders right at around these prices. So you're going to see a little bit of resistance in the $33 area and up at 48. But what is driving this breakout, these prices surging in silver? Let's take a look. Hansa Czerny says something big is coming in the silver market and fast. Let's connect the dots. 1. Over the past days, multiple signals have emerged that point to a massive shift in the silver landscape. What used to be a boring, manipulated market is now heating up like never before. 2. Physical deliveries are exploding. On the COMEX, silver deliveries just broke out, nearly 2 million ounces per day, matching global daily production. Now let that sink in for a moment. On the commodities exchange in New York, deliveries match global daily production of silver, never mind the rest of the exchanges around the world. Industries, investors, and shorts are now competing for metal. Supply squeeze incoming. Now, Alan is going to cover this same tweet in another video, and he's going to verify all of this and analyze it for you. We don't want to spread any misinformation here, so we're going to be verifying you all of this and giving you the correct information. 3, LBMA's silver reserves are critically low. TD Securities reports only 155 million ounces of free float silver remain in London, the lowest in recorded history. That's not a typo. The vaults are drying up. 4, EFP and OTC markets are dislocating. I hate it when people use a bunch of acronyms. What's an EFP? That stands for exchange for physical, and OTC markets are dislocating. Silver lease rates are spiking, 6% plus premiums widening. A perfect storm is forming in both commodities exchange and London. OTC is getting dangerously tight. This isn't normal. 5, China's top coin market is going into overdrive. You know, I'm going to skip this one. It's about a specific collector coin, and there's a problem in the math here. So Hansa, you may want to double check the math. 6, speculative capital is flooding in. Retail and institutional money are finally noticing silver's setup. Tight supply, high industrial demand, no excess mining capacity, ridiculously cheap compared to gold. They're buying, and fear of missing out is real. 7, tariffs and geopolitics add fuel to the fire. The U.S. just slapped a 30% tariff on silver from Mexico and the EU, who supply over 25% of U.S. imports. This could trigger a supply chain panic and price spike. 8, what does this all mean? We're not just looking at a price rally. We're witnessing the early stages of a structural breakout, one that could end decades of suppression. I hope so. 9, TD:DR. I'm not up on all of this stuff. I had to look that one up too. It means too long, didn't read. So this is a synopsis of the whole tweet. Physical market is on fire. Inventories vanishing. Demand surging. Geopolitics tightening. Price finally reacting. Silver awakening is real. Are you positioned? Personally, yes, I've been planning on this now for more than 20 years. Mr. Yuppie, it's literally impossible to borrow silver right now. The shorts are shissing their pants. God, do I ever love seeing short funds burn to the ground. And silver demand for solar panels, 2023 versus 2030. I want to point this out. Conservative projection. So you had about 16% of global supply going to solar panels, and here you've got 25% is a conservative projection. Now, there's not that much silver in each solar panel, and so $50 silver, $100 silver, it isn't going to raise the cost of each solar panel by that much. But when you get up to $700 silver, they're going to be really trying to conserve on this, or it may even slow down the sale of solar panels. This is from Just Dario, and he says 409 to 1 is the paper to real silver. So you've got 400 people dancing around on the Titanic for each seat in a lifeboat. Now this is futures, options, swaps, forwards, derivatives, and ETFs. So it's everything. This is from Mr. Yuppie again, just in, Citigroup backing silver over gold. Wow, they have a price target of $43, but what they don't know is that it's going to be a heck of a lot higher than that. So that's their 6 to 12 month outlook boosted to 43. But what I want to point out is that the 3-month forecast was raised to $40 from $38. Now this was on the 16th of July, and I looked up some other articles to confirm that the 16th is the day that Citigroup made this announcement that they're upping their forecast to 40. The S&P 500 is up 6.11%. Gold is up 28.77%, and silver is up 31.51%. If you take the performance of these different items, their percentage change from January of 1980 until 2022, the Consumer Price Index would put silver at $200 per ounce. If you're comparing it to the single-family median price home, $468. The stock market, $2,178. The 10-year Treasury bond, $1,059. U.S. GDP, the same as real estate, $468. Currency in circulation, $971. M2, $781. And the average of all of these was $921. And I said, I don't think it's going there, but this is a possibility, this range of things. So that 781, maybe that's not too irrational when you see what I've got coming up. So this is Value Seeker adjusted silver for the M2 currency supply growth.
The S&P 500 just closed above 6,300 points for the first time, notching its 8th record high in a month. Alongside that, Bitcoin has also hit new all-time highs, bonds are in the middle of a steady rally, and oil price volatility has cooled. Global markets, at least on the surface, have shown surprising resilience this year. That calm tone is a stark contrast to the panic in early April, when the S&P 500 hit a 12-month low and was teetering on the edge of a bear market. That drop came after President Trump announced his first round of Liberation Day tariffs, shaking markets across the board. Now, markets are floating near highs again, even though tariff uncertainty hasn't gone anywhere. Investors seem to be tuning out the noise for now, but U.S. stocks are trading at historically expensive levels. And with Trump's self-imposed August 1st tariff deadline fast approaching, that optimism may be tested. Mike Maloney warns that this market surge is being held up by just a handful of mega-cap tech names, the so-called market darlings. Strip them out, and the broader market looks far less impressive. He draws a comparison to 1929, when a narrow group of leading stocks created the illusion of strength while the underlying market was already deteriorating. That didn't end well. Let's get back to the interview.
6. Speculative capital is flooding in. Retail and institutional money are finally noticing silver's setup. Tight supply, high industrial demand, no excess mining capacity, ridiculously cheap compared to gold. They're buying and fear of missing out is real. 7. Tariffs and geopolitics add fuel to the fire. The U.S. just slapped a 30% tariff on silver from Mexico and the EU, who supply over 25% of U.S. imports. This could trigger a supply chain panic and price spike. 8. What does this all mean? We're not just looking at a price rally. We're witnessing the early stages of a structural breakout. This is the borrow rates for SLV if you want to short silver on SLV, and it just had a huge spike. Tavi Costa says silver lease rates are surging just like platinum did before its major breakout a few weeks ago. If you ask me, if it looks like a duck and quacks like a duck, so the silver lease rates above 6%. Let's see what platinum did. Okay, so this is platinum. So the lease rates on platinum spiked just like that before this major breakout. And what you see here is platinum below $1,000 an ounce, and then suddenly $1,464 in just a little over 2 months, more than a 50% move, for about a 50% move from in 2 months and a week or so. Then Nostradamus says, I don't know who needs to hear this, but gold is in plentiful supply. Silver is in its 5th year of deficit, and a few bankers are 400 million ounces short they will need to find somewhere. This is from Enough. 483 million ounces of silver were dumped into the market yesterday in an hour in an effort to stop this breakout in silver. This short position is now completely underwater, which means that the banksters that sold those ounces need to come up with physical. So this volume bar is the 483 million ounces that got dumped into the market. Is that from one source or just a couple sources? I don't know. But, it's very interesting, the headlines that are happening. I'm just reading you what other people are saying. Alan is going to investigate more of this stuff and try and corroborate this. So this is from Mr. Yuppie again, just in. Citigroup backing silver over gold. Wow, they have a price target of $43, but what they don't know is that it's going to be a heck of a lot higher than that. So that's their 6 to 12 month outlook boosted to 43. But what I want to point out is that the 3-month forecast was raised to $40 from $38. Now this was on the 16th of July, and I looked up some other articles to confirm that the 16th is the day that Citigroup made this announcement that they're upping their forecast to 40. Why? Because this is the 16th, because 2 days before it hit 39.14. So it was only 86 cents away from their 3-month price forecast. So before they looked like complete morons, they had to raise that forecast. But here, just 4 days, 4 trading, 1, 2, 3. This is when this is when they changed their forecast. 1, 2, 3, 4 days later, it hit 39.33 on the closing. That is just 67 cents away from their 3-month target that it could reach that target. So will they look like even bigger morons tomorrow or the next day or the next day? I guarantee that, well, I don't guarantee, but within a very short period of time, the answer is most likely going to be yes. A great moron probability. This is the CP lie, the one that the government currently produces. And if you ever hear somebody talk about the CP lie, that I coined that term from my first book. And so that's where it came from. This is John Williams' alternate CPI. Now, what is that alternate CPI? It's the government numbers. It is the United States government Consumer Price Index methodology from World War II to 1982, and then they started fiddling with it. So this isn't some conspiracy theorist, lunatic out there. John is only applying U.S. government methodology, what they used to use, because he was an insurance actuary, and everything started to calculate wrong after 1982, and he wondered why. He went back and found out that the U.S. government had fiddled with the inflation statistics in order to do things like screw Social Security recipients out of the full amount that they're owed. It doesn't keep up with true inflation. Is anybody ready for $2,000 an ounce silver? That's what I want to know. But always remember, silver is a bad investment, at least according to this guy, Dave Ramsey. When he said it, it was $24. The last time he said it, silver was 24 and gold was under 2,000. I want to thank you for watching. Please like and subscribe. If you're going to buy some gold and silver, consider us for your dealer. That's how I...
Here's what's getting clearer by the day. Silver isn't just catching up. It's pushing into uncharted territory with real momentum behind it. The squeeze between rising industrial demand and limited above-ground supply is now colliding with a market that's shedding dead weight and clearing resistance. This isn't a typical rally. It's a long overdue reckoning for a metal that's been undervalued and overlooked for far too long. Add to that the growing disconnect between surface-level market optimism and structural economic stress, and the setup feels less like speculation and more like inevitability. Will silver become the first asset to fully expose the gap between perception and reality in today's markets? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.